Welcome back.
Thanks for having me.
So before we look ahead, let's look back. I mean, what was your takeaway from last week from these big tech reports that came out?
Well, like I said, AI means both artificial intelligence and additional income. And what we saw, I think, from the big three that I focused in on in Alphabet, Microsoft, and Meta, the first two, Alphabet and Microsoft, really delivered, and I think they've given a very clear articulation of how they're looking at the opportunity in AI to drive revenues, and at the same time have really articulated a little more clarity around how the return on investment from the investments that they're making into their infrastructure to support AI are going to play out. Now, I think even though Meta did deliver great returns, the lack of clarity around how their investments are going to drive additional revenue, I think, needs to be further understood. In fact, when you look at Meta, they announced that they're going to invest an additional $5 billion or so into infrastructure, kind of bringing that to about $37 billion for the year. And I think investors are having this eerie sense of reflecting back to what happened to Meta's stock when they announced heavy investments for AI, the artificial, the virtual reality, right? And so I think this metaverse investment that Meta did that didn't quite play out yet, I think investors are looking at AI now and wanting to just have more clarity from Meta around how those investments are going to drive growth.
Was Alphabet the standout? I ask you that also. I mean, the fact the stock's up 10% over the past month. And also, it continues to trade at what some would suggest is a much more reasonable valuation than some of these other names with, not nearly as much of a premium as a couple other names that you could easily point out.
Yeah, no question. That's a great insight, Scott. Well, look, first of all, it doesn't help when a dividend is announced along with a share buyback. But putting that aside, I think looking at the comments around the CEO for the infrastructure that Alphabet has across its business units, they're very bullish that that's the best infrastructure in the business to be able to deliver on the promise for AI. So I think going back to your comment, yeah, I think Alphabet is very well positioned and, again, has clearly articulated a return on investment strategy that we feel will deliver at least a 50% return on investment on an annualized basis. Look, I think it also shows that the search business, the YouTube business, those core businesses for the revenue drivers and income drivers for Alphabet are showing a lot of resiliency. And, as we look towards this environment where we may see, increasing or at least no rate cuts, normally, that environment is devastating for growth companies. But, as your guest alluded to, that's because a lot of these, revenue streams are on the back end. But when you look at a company like Alphabet, they're delivering cash flows with the dividend share buyback and delivering revenue right now. So I think it's very well positioned.
Let's talk Amazon and then Apple. But what are your expectations here from Amazon this week?
Yeah, I think Amazon is going to deliver solid results. I think what the market's looking for and everything that I'm seeing is, the analysts feel like there's more that could be delivered from Amazon stock. And when you look at the fundamentals, I would have to agree. I think there's more that Amazon can deliver based on, what we're seeing with these trends at some of these other companies around the cloud business.